Okay, so I think we should be good to go. So welcome back, everyone. Hope you've all had a little break and got your coffee. We're now getting down to the, I guess, the qualitative part of the climate change questionnaire. And just to explain, we're going to have Anya from CDP Reporter Services. And he's also based in Berlin, I believe, but originally from California. So welcome, Anya. And when we've done that, then we're expecting that following Anya's presentation, we're going to have the Q&A session. As I said, we'll see how it goes with people going live, but feel free to pop in some questions. We got one question already about science-based targets, so we'll pick that up after. A couple of practical questions as well. So without further ado, yes, we will have polls during this, so please get on your Menti. Anya's got quite a few polls, so hopefully we'll find this interesting to see what the responses are from the responders on the call. So I'll hand over to you, Anya. Stop sharing here and you can share your screen.
Great, thank you, Brian. So just give me a second to share my screen here. And
there we go, we got you. Yeah.
All right, excellent. Okay, so I guess we can go ahead and get started. So hi everyone, thanks for joining the session today. As Brian said, my name's Anya and I'm an account manager on CDP's Reporter Services team based in our Berlin office together with Olwen. And Reporter Services is a membership service that we provide to corporate responders to CDP's climate, water, and forest questionnaires. And through this membership, we help companies improve the quality of their reporting and environmental performance, but also provide reporting support and some analytics and benchmarking that also provide insight into best practice. So, we help companies digest the reporting requirements that CDP is setting out and understand those actions that we're trying to incentivize. So I'm working with companies all over Europe across a variety of sectors, and that's why I'm here today, basically, is to help all of you understand the CDP climate change questionnaire and some important changes that have been made in 2020, as well as highlight some key best practices to support you in responding to CDP in 2020. So just to give you a slight overview of our agenda today, I'm going to give you a quick introduction to CDP scoring. Then I will talk about our general climate change questionnaire. So I'm going to walk you through each of the modules, giving you a high-level overview of what kind of information we're asking from companies, as well as going through the key changes in each module in regards to scoring methodology and questionnaire changes. And then at the end, we'll have some times for some tips on best practice reporting. Some of the content I will go over quite quickly, but as Brian mentioned, there'll be time for questions at the end, and all of this will be provided to you, of course, after the session. And as you've seen in previous sessions, and as Brian just mentioned, we are going to do some polls to keep you engaged, but also to get an understanding of what kind of actions companies in the room are already taking. So yeah, we have quite a bit to cover, so let's get started. So kicking off with an introduction to CDP scoring. So with CDP scoring, we aim to kind of cover 5 key scoring principles. So our scoring is independent, meaning that we have external partners who are conducting scoring, who are trained by CDP based on rigorous quality assurance. Our scoring is comparable, so the CDP methodologies are consistent across geographies and sectors, and we're looking for the same key actions to be demonstrated. Our scoring is, of course, transparent. So as you know, all of our guidance and methodology are available on the CDP website. Additionally, we aim for the scoring to be wide-reaching. So in 2019, we scored about 11,000 companies across the 3 questionnaires for both investor requested and supply chain requested companies. And finally, we aim for the scoring to be influential. So of course, we publish our scores on the CDP website and in our reports, but we also host this information in Bloomberg terminals, and this information is also shared directly with investors and other key stakeholders. So how do we score companies? So as you may know, the CDP scoring approach takes a leveled approach, and scores are calculated as a percentage for each level. In order to reach the next level, a minimum score must be achieved on one level before you can be scored at the next level. So this approach really aims to provide complete, or to incentivize complete reporting, and to incentivize consistent progress in different areas of your climate change performance. So that final letter score that you'll receive, which I'll explain in a little bit more detail in a second, is going to be determined based on the highest score in one of those levels. So our scoring levels, we describe them as these 4 levels that you see on the screen. So we have the disclosure level, which is the D or D minus level. This is really looking at where your company is now, the transparency of your data. The next level is the awareness level. So how aware is your company of the impacts of climate change on your business? That's the C level. Then you would move into the management level, which is how you're actually taking actions in a consistent way to manage climate risks and impacts. And then finally, the leadership level is looking at what ambitious and innovative actions companies are taking to really solve the climate change problem, and that would be the A level. So in order to be scored at a subsequent level, you have to reach a minimum percentage of points at the previous level. Those thresholds have not been determined for 2020 yet, but usually this is looking at about an 80% of points possible at one level to be able to be scored on the subsequent level. So just to give you a little bit of insight into what this looks like at each level. So at the disclosure level, we're really looking at completeness of your response. So not leaving any blank cells, providing as thorough information as possible, and really looking at your ability to answer the questions in the questionnaire. The next level, the awareness level, the C level, is, as I said, looking at your understanding of the implications of climate issues on your business. Finally, or next, looking at the management level, we're looking at which actions you're actually implementing to manage climate risks and opportunities. And finally, the leadership level, we're looking at those companies that are really engaging in best practices. And as you may have heard or read or seen in other presentations, we see the disclosure process as a journey. So every company starts at a different point. Some of you I've heard on this call are first-time responders, so we would really be expecting you to just, provide as much information as you can, provide information on your greenhouse gas emissions data, start to discuss your governance and strategy and risk management around climate issues. Once you reach the awareness level, we want to start seeing some company-specific details of these climate-related issues for your business, whether you have, a risk and opportunity identification and assessment process. At the management level, we want to look at your management method for risks, for example, or your portfolio of emission reductions initiatives. And finally, at the leadership level, we're really looking at your targets, how your emissions are changing year on year. And at this point, you would have a really completely TCFD aligned response. So getting into the scoring categories, this is another element of CDP scoring. So we break down the different data points into the questionnaire into scoring categories. And these categories encompass different sections of the questionnaire. So this allows us to group areas and to provide you a bit more insight into your performance on these key topics. And additionally, we do weight these sections depending on different sectors and the different impacts that various sectors have. So just to briefly explain a little bit more about the weightings, we weight these categories at the management and leadership levels, and this is really related to the overall importance of your score in those categories at the higher levels. And as I said, for sector-specific questionnaires, these sectors have their own specifications, and so they might have a slight modification in the weighting of those categories. I won't go too much into these details. We do have a document available online that covers all of the scoring category weightings for each sector, but I just wanted to highlight these couple of changes that we've made slight decrease in the weighting of the governance category, as companies have demonstrated quite significant maturity in this area. We are incentivizing at a slightly higher % opportunity disclosure at the management level. And then due to some modifications in the risks and strategy section and a combination of questions, we've combined business strategy and financial planning into one category, now at 9%. So no change in the overall %, but just merging those two categories. And finally, at the leadership level, we've increased the weighting of energy, as this is a very important topic for managing the low carbon transition. Okay, so we are going to get started with all of the climate change modules and all of the key changes. So as I said, there's a lot of information to cover. I'm going to walk you through each module briefly and then highlight some of the main changes in the scoring methodology and questionnaire. So just to give you a brief introduction about the changes. So you may be wondering, why are we changing questionnaires and scoring year on year? Well, CDP is working to continuously improve our questionnaires and methodologies. We're doing this to reduce the reporting burden for companies, but also to improve the quality of the data that we collect and make sure that we're incentivizing the right actions. So, many minor changes may have been made to question format, to wording, and to information requests, but this is really to ease the reporting process as well as, take into consideration stakeholder feedback and evolve in line with best practice. So the climate change questionnaire consists of 14 modules that are presented here on the left-hand side of the screen. And the questionnaire is really looking at data on your emissions, on your energy consumption, on your climate-related risks and opportunities and how you manage those, and really looks at how climate issues are integrated into governance, business strategy, risk management processes, and your business overall. We do have a minimum version of the questionnaire for smaller companies, which companies are eligible to respond to in the first year, or if they're making under a certain amount of revenue annually. But this is only available for those companies. They're presented with the same set of questions, but just a smaller subset. And we do recommend, though, that companies just take the opportunity to respond to the full questionnaire, as this is the way that they get scored, and that gives you, a benchmarking to then improve your performance year on year. And finally, there are additional sector-specific questions which are not highlighted here and won't be part of this presentation, but Olwen will cover some of those in a later presentation. But we do have sector-specific modules and questions for companies engaged in high-impact activities. So let's just dive right into the changes. So this year, we have seen some changes to the climate change questionnaire, but a lot of them are really minor changes, really to just, as I said, simplify and streamline the reporting process. So 80% of the questionnaire has actually had no change or a very minor change. And the big changes that I will highlight throughout this presentation are 4 new and 19 modified questions, mainly to improve the flow of the questionnaire, as well as remove repetitive data requests and clarify any data that we're requesting. This year, we also do have a couple new sectors with new questions, but again, Olwen will cover this in her presentation later on. So the introduction module, this is the first module of the questionnaire. There are no changes to this module in 2020, but just to give you a bit of an understanding, especially for first-time responders, this module allows data users to understand your organization's activities, to contextualize disclosure, to understand, where you operate, your reporting boundary, and your selections in this section of the questionnaire will affect what questions you get later. So moving into the governance module. So this is the first module that has some changes. So to give you a bit of background on the module, in this module, we're looking at board level oversight and management level responsibilities for climate issues in your business, as well as the incentives in place for effectively managing these issues. Board level oversight of climate issues is considered best practice by CDP. And we're interested in understanding, your approach to managing climate issues at the board level and how this is aligned with your organizational strategy, management policies, and performance objectives. So to get into the changes, so for this module, we have 2 modified questions and 3 small scoring changes. This is the first time we'll be seeing the pathway diagram. So just to give you an understanding, your answers to some of these leading questions will then present subsequent questions for you. So as you can see, there's a yes pathway and a no pathway. Companies who respond yes will get a series of questions, and companies who respond no will get separate questions. So I won't go into all the details of those different pathways, but just highlight here the ways in which the structure of the questions and scoring has changed in the last year. So the first scoring change that I would like to highlight is in question 1.1a. So this question is looking at the positions on the board with responsibility for climate issues. So for this question, the scoring criteria has been changed at both the management and leadership levels. So the management criteria has been modified to now include how the individual's responsibilities related to climate issues, which was previously scored at the leadership level, but is now scored at the management level. So this criteria is trying to assess basically whether the individual you've selected actually has climate responsibilities integrated into their role. And now we have a new leadership criteria for this question, which is asking you to provide an example of a climate-related decision made by the individual or committee that you've selected on the left-hand side. So moving into 1.1b, so this question is looking for further details on the board level oversight of climate issues. So we've actually simplified the scoring for this question and removed criteria 2. And so now you're only going to be scored in this question based on your drop-down selection. So the frequency with which climate issues are scheduled as an agenda item, and then which governance mechanisms have climate issues integrated into them. So this simplifies things and also reduces redundancy of scoring criteria. The next scoring change that I would like to highlight in this section is looking at where in the organizational structure these positions or committees lie and what their responsibilities are. So there was a previous awareness criteria in 2019 that has now been moved as a management criteria, and that is the rationale for why climate issues have been assigned to this particular position or committee. So now at the management level, you'll be evaluated on those 2 criteria, looking at both the description of those responsibilities with regards to assessing and monitoring climate issues, and a clear rationale for why the responsibility lies with that individual particularly. So now moving into 2 modified questions. So these are very slight modifications again, but just important to highlight. We are interested in understanding whether you're providing incentives for the management of climate issues to your employees. Last year, the only options selectable here were yes or no. And this year, we've changed that to be able to provide whether you plan on doing so in the next 2 years, or whether that's no and you don't plan on doing so. This aligns the approach of this question to our forest and water questionnaires, and also now you have the option to provide a comment if you want to provide further information, which is of course optional. Then based on your response to C1.3, you will be presented with this subsequent question about the details of any incentives that you provide to employees for the management of climate issues. So last year we had 3 drop-down options, which were looking at non-monetary recognition or other non-monetary recognition. So we've just streamlined this, and now you have 2 options to select from. That's monetary reward or non-monetary reward. We've just done this to simplify and improve the data quality. And then additionally, you can now select the company performance against a climate-related sustainability index as an activity incentivized. So I think this brings us actually to our first poll. So the question that I wanted to ask to the audience is, does your company provide any monetary incentive to the C-suite or board level employees for managing climate issues? So you can select that yes, you do, no, you don't, but you plan on doing so, or no, and you don't plan on doing so in the next 2 years.
And Declan, can I ask you to remind us of the code again? So we're in Menti. If like me, your session is timed out and you're going, I think it was 9-0. Do you have the...
Brian, it's in the chat, menti.com, 905585.
There we go. That's right, 905585. Perfect.
It's ready to share there whenever Anya wants to hand it over.
So should I stop sharing my screen?
You stop sharing, yeah.
Okay.
Should be able to see that, Anya?
Yes, I think I can see it. So we see that 40% of you are providing monetary incentives to the C-suite or board level employees for managing climate issues. 18% are saying no, but you plan on doing so, and 35% no and don't plan on doing so, and some of you don't know yet. So yeah, this is a really good start, already seeing that over 50% already have incentives in place or are planning on implementing them in the next 2 years. Yeah, this is an important topic for CDP in terms of best practice. We want to understand, what degree companies encourage their employees to address these climate issues, but also how you're incentivizing specific behaviors and performance. And for CDP, best practice at the leadership level would be, providing a monetary incentive to the C-suite or board for managing climate issues.
All yours again, Anya.
Great, thanks. All right. Okay, you can see my screen again, right?
Yes, we got you. Yep.
Okay, great. All right, so moving into the next module, risks and opportunities. So this is the module that has the most significant changes for this year. So we'll spend a good amount of time on it, but a lot of it was to reduce the reporting burden and to improve the flow of the questions in this module. So the risks and opportunities module is focusing on your processes in place for identifying, assessing, and managing climate-related issues. So as we've seen in recent years, climate risks can have a really significant impact on your direct operations and supply chain. And so the information requested in this module helps investors to assess potential impacts of climate risks and opportunities and to understand the adequacy of your company's response to these risks and opportunities. So this is also a very important section of the questionnaire when it comes to TCFD alignment. So you can see the question changes highlighted on the left here, so quite some significant changes, but I think overall positive for the flow and consistency and quality of the data. So I'm just going to jump right in and walk you through these changes. So the first change is we have a new leading question, which is, does your organization have a process for identifying, assessing, and responding to climate-related risks and opportunities? So this improves the flow of the module and allows for subsequent questions to be presented to companies who do or do not have this process in place. And this new leading question is only scored at the disclosure and awareness level. So then we also have another new question, which is question 2.1b, requesting you to provide a definition of substantive, financial, or strategic impact for your business. So this was a criteria that was previously requested in question C2.2b, but we've separated that out as its own question this year, as it's really important for interpreting all the subsequent data that you provide on your risks and opportunities. So on this slide in red, you can see some examples of what we are looking for in terms of these definitions. So we would want the definition to, first of all, explain how you define substantive, financial, or strategic impact, specifically when it comes to identifying climate risks and opportunities, and then for you to provide a description of any quantifiable indicators used to describe that impact. So you see some examples here below. So some companies are using a dollar value as an indication of an indicator, and other companies are using, for example, an indication of the number of factories impacted and the duration of time. So yeah, this will be a new important question, but hopefully if you've responded to CDP in the past, this is information that you can pull from the previous question, C2.2b. So the next major change we've made is actually the merging of 4 questions from 2019. So we've merged C2.2, C2.2a, C2.2d, and C2.2b into one question. So as you can see, you may recognize these questions that all relate to your risk assessment, identification, and response process. So before we kind of separated out assessment and management process, and now we've combined this all together. So the process from 2.2 is highlighted here. The frequency of assessment from 2.2a is demonstrated here. And then your description of your process is pulling from information in 2.2b and 2.2d. So just to give you an indication of the scoring of these 2 questions. So we have the same expectations as we had in previous years, but at the leadership level or best practice, basically, we would want to see that a company assesses climate-related risks more than once a year, and that you are covering the maximum number of time horizons possible. So you have a question where you can indicate the time horizons, how you define time horizons for your business, for short-term, medium, and long-term. And we would want that all 3 time horizons are covered in this question, because this shows that you're able to basically identify and assess risks that might have implications over a longer period of time. So that's the scoring update for those 2 columns. And then for this new description of the process column, previously, as I said, we had a different question for your process to assess risks and opportunities and to manage risks and opportunities. So now this is all combined into one question. So we'll ask for information on that process here. That should be consistent with the drop-down options you've selected in frequencies of assessments, value chain stages, risk management processes. And in addition, we want you to pull the information you hopefully previously provided in C2.2d to provide a case study of how you apply this process to at least one physical risk or opportunity and one transition risk or opportunity. Okay, another modification for this section. So 2.2a is not a new question. It's actually what was previously 2.2c, but we've just simplified the requirements for this question. So previously you were asked to report on upstream and downstream risk types. We've actually removed those risk types from this question, as these rather classify the location of the risk and not the actual risk type. So you have less of these to respond to this year. And now from the scoring perspective, we've also removed the criteria which was asking you to explain how the risk type is included in the risk assessment process, as we found this to be repetitive. So now what you need to do for this question is just provide, if you say that this is a relevant risk and included in your risk assessment process, we want an example of the risk type that's relevant to your business. And if it's not relevant, we want an explanation of why that risk type is not relevant to you specifically. So this is a very good example of one of the questions that we're really looking for very specific examples that are relevant to your business, so relevant to your geography or to your sector or to various aspects of your operations. This helps data users understand that you've really assessed the potential impact of these risks. So that brings us to our next poll before we get into questions 2.3a and 2.4a on the risks and opportunities you've identified. So curious to hear from the audience whether you've identified any risks, climate-related risks or opportunities with the potential to have a substantive impact on your business. So you can say whether that's only risks, only opportunities, both risks and opportunities, or you haven't identified any risks or opportunities yet.
Anya, whenever you want to unshare, I'll share my screen.
Perfect.
See the data coming in there now.
Okay, great. Yeah, so we can see that actually quite a few companies have identified both risks and opportunities, with fewer companies not having identified any yet. So this is good to see. And I think also important to note that this year, this definition that you provide of substantive impact should really be the determiner for the risks and opportunities that you report in C2.3 and 2.4a. So those should help you determine whether or not you've identified risks that can have a potential impact on your business. So I can take back over now. Can you see my screen? Great. Okay, great. So moving into 2.3a and 2.4a. So there have been some minor modifications to these two questions, which I won't go into too much detail, but we've just slightly changed some of the drop-down options to make them more consistent. So you can see the change, an example of a change from 2019 to 2020. So we've gotten rid of these transition and physical risk categories and just given the actual risk types. Which of course can be divided into physical and transition risks on their own. And additionally, we've significantly reduced the number of drop-down options available for the potential financial impact of those risks that you've identified. So this should, decrease the reporting burden and make the data quality a lot better for this question. The very similar changes for the opportunities question. So this is the same in risks, but we've just modified the time horizons to match the content in previous questions. And then again here, we've simplified the primary financial impact dropdown options. So that should be a positive improvement for responders and for data quality. The final change in the risks and opportunities section that I want to highlight goes for both the identified risks and the identified opportunities that you've provided. So the approach to this question is the same as last year. This will be the best three rows scored, so the best three risks and the best three opportunities that you've provided. And as best practice, we do expect that companies provide a minimum of 3 for each. And one key change at the management level is that the financial impact columns, both for the impact and cost of response, require a breakdown of the figure that you provide. So as you can see on the slide, criteria 3 and 5 are now asking for an explanation for how the financial impact figure was calculated, providing some kind of quantitative breakdown of the figure that's consistent with the guidance that you can see here on the right side. So we want to know the approach that was employed to calculate the figures used in the calculation, and any assumption that those figures might be dependent on. And finally, the management criteria 4 and 5 from 2019 have also been merged in 2020 to avoid repetition. So you can see the new criteria for 2020 at the bottom of the slide. And for each risk and opportunity that you disclose, we want to see a case study providing a description of any company-specific activities, projects, products, and/or services that aim to address the risk or realize the opportunity. All right, so that was a lot, I realize, for the section on risks and opportunities. The rest should be slightly more simple, but now we'll get into the strategy module. One important thing to note is you may have noticed that 2 questions from the risks and opportunities section were no longer there. That was 2.5 and 2.6. And these 2 questions have actually been moved into the strategy module, again, to reduce reporting burden and improve the quality of the data. So looking at the strategy module here, we really want to see how climate issues are integrated into your business strategy. The module also includes questions on scenario analysis and transition planning. So we'll get into that in just a second. Looking at the changes here, we have 4 modified questions, 2 merged questions. So those were 2.5 and 2.6 with 3.1c and 3.1d. and a slight scoring change. And the main driver for revising this module was really the revision of module 2, as we just covered. And we want to draw more on the risks and opportunities you've previously reported and how those have an impact on your business strategy. So the first modification is just an additional option that you can select in this first question about how climate-related risks and opportunities have impacted your strategy and or financial planning. So now, instead of just yes or no, you're able to select that you have also developed a low carbon transition plan. And in short, this is just a plan on how your company plans to transition your business model in a way that's compatible with a net zero economy. So this question will be scored at the disclosure and awareness level this year. And that brings us to our next poll. So as I mentioned, scenario analysis can be a really useful tool to understand the business implications of climate risks and opportunities. And tools such as scenario analysis can be really useful to understand those implications. So I would be curious to hear which companies in the room are using scenario analysis to inform their business strategy, or whether you anticipate doing so in the next 2 years or not.
Whenever you want to switch over, Anya.
Perfect. Okay, wow, that's great. Yeah, 43% using scenario analysis. So yeah, CDP sees scenario analysis as really a best practice tool, as I said, to understand those implications of risks and opportunities. So great to see that a lot of you are doing so already, or anticipate doing so in the next 2 years.
Yours.
Great, thank you. All right, so moving on to some further changes. So as I mentioned, question 2.5 has been shifted into the strategy section. So here we're looking at how climate risks and opportunities have influenced your business strategy. So this question has been slightly simplified in terms of the drop-down options that you can select from in the second column. So previously you had to select whether it was impacted, not yet impacted, and now you're just selecting yes, no, evaluation in progress, or not evaluated. And so this also merges some content with what was previously requested in C3.1c. So this modified question is scored at the disclosure, awareness, and management levels. You can see the scoring criteria on the right-hand side. But basically, the important thing to be aware of is we've eliminated one row, which was the mitigation activities row. And then wherever you select that, yes, this part of your business has been impacted by risks and opportunities, we want to have an example of how your strategy has been influenced, the time horizon that covers, and an example of a substantial strategic decision that's been influenced by climate issues in this area. So that's important to know. And as with the rest of the questions, if you select no, we always want to understand why you say that this area of your business has not yet been impacted. So I would say that most of the content you've previously provided is relevant for this question. So if you can, continue to use what you've reported last year and update that in line with new requirements, that's what we're expecting this year. So 3.1e is a modification of 2.6, which was looking at how and where climate issues have influenced your financial planning. So this question has actually been significantly simplified this year. So rather than explaining how each of the areas of your financial planning have been impacted, you can actually select from a drop-down only those areas that have been influenced by climate issues. And then you should describe a general description of the influence of climate-related issues on your financial planning, and give a case study of how that has influenced at least one of the elements that you've selected. So if you have a really strong example from your response last year about how one of these areas of your financial planning was impacted, you can use that same example this year. So we've really, I think, consolidated and reduced the reporting burden on this one this year. Finally, 3.1F, since we did reduce that 3.1C significantly, you can provide any additional information about the influence on your strategy and financial planning here. So this question is not scored, but allows you to provide extra information that you want to data users. And finally, the last point that I will make is just about whether you say that you do not, that climate issues have not influenced your strategy or financial planning. So here we're asking for the reason why you're saying that climate risks and opportunities have not influenced your strategy. Unlike last year, this question is no longer scored at the awareness level, so the previous awareness criteria has just been moved to the management level, as this is kind of more of a management level criteria. All right, so that covers everything for Module 3. Moving into Module 4, and conscious of time, I might go quickly over some of these topics, but there will be opportunities for questions at the end. So target setting is really important as it provides, the direction and structure to your environmental strategy. So this is a really key question within the climate change questionnaire, and we will go over some very slight modifications to these questions from last year. So we have 2 new questions, which are just separating out information we asked last year, C 4.2 and 4.2a, and then some slight modifications to improve the quality of the reported targets data. So before we get into this one, we have our next poll, which is whether companies in the room do have an active target to reduce your emissions.
It should be up on your screen.
Yeah, I can see that's pretty good. 80% with an active emissions reductions target. So that's pretty good. I think that's probably much more than the global average. So it looks like people are doing pretty well in this room.
Yeah, we want to get more responses in. We got 2015 responses.
Okay.
So if people are, snoozing, there's a few more coming in there. I'm sure everybody's paying full attention, but there may be a little small sample bias there. If they haven't set, they mightn't be telling us.
Could be. Well, it's definitely important in the eyes of CDP to have a target, especially when getting into those management and leadership levels. So very important to be considering setting targets. Okay, so the modifications here really cover just, improving data quality. We've added a couple columns that actually now provide an auto calculation of the target coverage. So a lot of this is really just to improve the quality of the data here. And the same modifications have been made for both absolute and intensity targets. So those are consistent. And we do have a new leading question about your other climate related targets that were active in the reporting year. So those are non-emissions related targets. So this year we've separated out low carbon energy targets from other climate related targets so that we can better incentivize and score these questions. So now you have the ability to select from these drop down options here, and your selection will result in the subsequent questions that you get. So this new question, 4.2a, appears if you've selected that you have targets to increase your low carbon energy consumption or production. So this new question is asking about the details of your targets to increase low carbon energy consumption. Most of the columns in this table are aligned with all the other questions on targets. But what is different from the other questions is the additional targets columns on the target type. That helps define the energy carrier and whether this is energy consumption or production, as well as whether it includes all energy sources or renewable sources only. And the scoring for this question, it's being scored at the disclosure and awareness levels with a proportional scoring based approach, so looking at the completeness of the rows. And the management level, the criteria is based on your progress made towards achieving the target, similarly to how we approach C 4.1a and 4.1b. Next question, 4.2b, is also based on your selection in C4.2. So this is any other climate-related targets that you've reported on. It's taking the same approach as the other targets questions, and we've added some additional target types that you can report on this year based on feedback from stakeholders. So any other climate-related targets that you have can be reported in this question. And the final change that I want to mention for section 4 on targets and performance is on question 4.3b, looking at the details of your emissions reductions initiatives reported or implemented in the reporting year. So the only revision here is actually expanding the drop-down options in column 1 to cover the most commonly reported initiatives. And now the approach to scope has been reverted back to select all that apply. So last year you could only report that on a single scope, and this year you can select all the scopes that are covered by that emissions reductions initiative. So emissions methodology, no major changes to cover here. So I'll just quickly go over this one, but this module is just looking at your base year emissions, the details of the methodology that you use to calculate scope 1 and 2 emissions, and most companies are using the GHG protocol as their basic reference for this data. The next module is actually looking at the details of emissions data. That's module 6. So as you know, reporting on emissions is considered best practice by CDP and is really a prerequisite to understanding and reducing your environmental impacts. So this section looks at your scope 1, 2, and 3 emissions. And for scope 2 here, you can report on both location-based and/or market-based approaches. So there's only one key change in this section, which is on 6.10, looking at your gross global combined scope 1 and 2 emissions. But before we get into that change, I did just want to talk about scope 3 emissions. So for the majority of companies, a significant amount of emissions occur in the supply chain. And so with C6.5 on scope 3 emissions, we want to understand how thoroughly you're actually accounting your scope 3 emissions and whether you've analyzed the emissions from your value chain. So curious to see which companies have started to measure their scope 3 emissions.
Deck, I'm not seeing. Oh, here we go. Got it.
Okay, that's a pretty high percentage. Do we know how many people have responded so far?
It's down at the bottom, Anya, 13 so far.
13 so far. Okay.
Yeah, it had closed by the time I got in.
I can't see the numbers actually.
It had closed by the time I got in, Deck, so it was quick enough, but 14, okay. Up to 14 there.
You still responded to me again?
Well, that's pretty good. There are a lot of resources available for those of you who have not started measuring your scope 3 emissions. So you can find a lot of this information in the guidance document available on CDP's website, but there is a free evaluator tool where you can first of all understand the relevance of various scope 3 sources to your business. And then of course the greenhouse gas protocol provides some really great resources on how to calculate those various sources.
Yeah, comment on that, Anya. I think we see a lot of companies reporting travel, maybe transport, maybe waste and water initially as kind of the easier ones, and then gradually getting into maybe purchased and physical embodied carbon issues. So
yeah,
just maybe a quick also note in that the CDP supply chain program is also a good way to help you measure your scope 3 emissions from purchased goods and services, and that's where you actually ask your own suppliers through the CDP mechanism for that data. So if anyone's interested, do let us know. We can tell you more about that too.
Yeah, thanks for that, Olwen. Okay, so swiftly moving on, C6.10 is looking at your intensity metrics for measuring your combined scope 1 and 2 emissions. So just to point out, the management criteria has been slightly changed from last year. So now we're actually cross-checking this with what you report in 4.3b. This cross-checking approach is actually something that we apply through other areas of the questionnaire as well, so something to be aware of. And for this question specifically, we want to be sure that the reason for change in your emissions is due to an emissions reductions initiative reported in 4.3b, or that somehow clearly describes an emissions reductions initiative. So we want to see that companies that are decreasing their emissions are actually doing so because they're implementing emissions reductions initiatives. Okay, so module 7, emissions breakdowns. There are also no changes here, so I'll skip over it quickly, but just important to know that here you can break down your scope 1 and 2 emissions by greenhouse gas type, by country, by business division, facility, or activity. And this is really important as it helps, guide, for example, emissions related legislation, but also helps you really understand where the main impacts of your emissions are coming from. So here we're looking at also year-on-year changes in emissions. Question C7.9a is really important as it gives an indication of the reasons for any changes in your emissions, and is an important one to do well in terms of scoring. So our next module to cover is the energy module. So there have been some slight changes in this module. As many of you may know, energy activities are really significant in terms of greenhouse gas emission sources. And this module is basically providing information on both your consumption and generation of energy from renewable and non-renewable sources. So the changes in this module have been quite subtle, but I'll just walk you through those. But before we get into that, I just wanted to get an understanding of what companies are procuring or consuming in terms of renewable energy. So curious to know if any of you know off the top of your head whether your organization consumes more than 10% of its energy from renewable sources.
Maybe you want to unshare and share? Seeing it, Anya?
Yep, seeing it changing. I was just waiting to see it stop moving, but I guess we can pause it there. Yeah, so seeing that 60% report that they are consuming more than 10% of energy from renewable sources. So yeah, that's already a pretty good start. CDP takes kind of step-by-step or a scaled approach to awarding companies for renewable energy consumption. So starting with above 10%, actually, we give credit at the management level, and then those thresholds go up to 25% for full management scoring, and then above 50% for leadership, 75 for partial leadership, and over 99 for full leadership scoring. So we really are along that journey trying to incentivize or push companies towards consuming more energy from renewable sources. All right, so the main changes here is just that 8.2C and 8.2D in the past were both looking at how much fuel and in megawatt hours your organization had consumed. So we've just combined these questions in 2020 to provide the information about the fuel and their emission factors together to streamline the reporting process. Something to note, which is the case for many sections of the questionnaire, is that the figures that you provide in the total megawatt hours consumed by the organization should be within 5% of the total figure that you provide in 8.2a. So wherever you have these breakdowns of different figures, and you have a gross figure requested in the questionnaire, those totals should not be greater than 5% different from one another. So this is another way that we're also assuring consistency of the data reported throughout the questionnaire. Another change for the energy section, so what was previously 8.2e is now 8.2d, and this question is looking at actually what energy your organization is generating and consuming. So previously this question was only scored at the management level, but this year we're actually incentivizing this generation from renewables at the leadership level as well. So if your gross generation from renewable sources accounts for more than 50% of your total generation, you're awarded now at the leadership level as well. And the final change to the energy module is just that in question 8.2e, which was in previous years 8.2f, on the zero emissions factor energy consumed, we've just clarified the wording, so we realized that this was already very low emissions or zero emissions energy sources, so we've gotten rid of that column and just updated some wording to basically make this clearer to all responders. Okay, so moving into the final sections here. So module 9, the additional metrics section, is usually just presented to organizations to specifically get a little bit more information about emissions and energy use, but this is usually, these are usually questions that are going to higher impact sectors, and there are no changes to this section this year, so I will skip over that for the general presentation. For module 10, sorry, verification. So this module we're looking at whether you verify the sources of emissions and any other climate related data that you report to CDP. So also a really important data point for reaching those management and leadership levels for CDP. There have been some very subtle changes. So previously, we had scope 1 and 2 verification in one question, and now we just have 3 questions each to provide your verification of each scope. So the previous 10.1a is now only focusing on scope 1 emissions. 10.2b or 10.1b, sorry, is focusing on scope 2 verification, and 10.1c is focusing on scope 3 emissions. And this question has just been slightly modified to align across all the 3 verification questions. So the next module we're going to discuss is carbon pricing. So this is also a really important module for CDP, and it's looking at, you know, which operations or activities you have that are regulated by carbon pricing systems, also looking at any carbon credits or internal carbon prices that you have set. And there have been some slight modifications to this section, namely to question 11.1b, which is looking at the trading schemes that you're regulated by. So 11.1b is asking about those trading schemes, and it only appears if you select in 11.1a that you are regulated by an emissions trading scheme. So the only change to this question is just that we've added a drop down we've added a column to allow you to select scope 2 emissions being regulated by an ETS. This was done, you know, following requests from responding companies, as previously it was only allowed to report on scope 1. So just a slight FYI change there. Internal carbon pricing is also an important topic within this module. It's seen as a tool that supports companies in, you know, assessing their climate-related risks and opportunities, but also putting a monetary value to those risks and quantifying them into some kind of uniform metric. So curious to see which companies in the room have set an internal carbon price on carbon already, or whether you anticipate doing so.
Can you see that, Anya?
Yep, I can see that. Yeah, so these responses look pretty consistent with general response rates, and carbon pricing is definitely a newer topic for some companies, and just so you know, CDP has a lot of resources available on our website about best practices for setting internal price on carbon. We also work with a lot of consultancy partners who can offer services to help you do this, so definitely a lot of information out there. Great, okay. So moving on to the last module actually that we will cover today, which is the engagement module. So questions in module 12 are looking at how your organization is working with suppliers, customers, and other partners in the value chain. So this data is really looking into the different types of activities which you engage in, also activities you engage in to influence public policy on climate-related issues. And this module also looks at whether or not you are integrating non-financial metrics and indicators into your mainstream financial reporting. So integrating the information from your CDP response into your mainstream reports. So there have been some very slight changes in this module, specifically to question 12.1a and 12.1b. So if you respond yes, that you engage your suppliers, and yes, that you engage your customers on climate issues, you would be presented with these questions respectively. And the main changes is just one additional criteria that we're requesting you to provide with regards to the impact and measures of success. So in this question, you're asked to describe a company-specific description of your engagement and also include the impact of this engagement and the measure of success. So now you should explain how you measure the success of your engagement, and then the impact description that you provide should be according to the measure of success that you have chosen. So this is just a change to basically make that information that you're sharing more meaningful and more consistent. So just a slightly updated criteria there. So that was the last module that we're going to cover today. I'm just going to briefly walk you through some of the main tips for best practice reporting, which also cover some key pitfalls and some key resources available to you to support you with your disclosure this year. So as you know, you have a ton of resources available to you on CDP's website. I really quickly reviewed a lot of these changes, but we do have CDP questionnaire changes documents available on the website, which would cover these in thorough detail. Also, if you go to cdp.net and click on guidance and questionnaires, you can find all useful resources, such as the scoring methodologies and guidance, as well as many other technical resources. So I would highly recommend that you do so. In addition, as I mentioned, Reporter Services does provide companies with enhanced report on their CDP disclosures. So this is also an option provided by CDP. And if you're doing this on your own, I would really recommend that you read the guidance and methodology side by side for each question, as this will be what's really going to help you understand the information that CDP is requesting in these questions. From a perspective of best practice reporting, so one of the major errors that a lot of companies make, especially in their first time responding, is leaving blank cells. So when you don't answer a question, this is considered non-disclosure or a lack of transparency by CDP. So any questions that you don't respond to will be scored 0. And sometimes this is also at a larger denominator, so out of a larger points possible than originally indicated. So you can even be penalized for blank cells. So really important to just make sure when you do respond yes or no to a question that you're always looking out for that follow-up question. And also in each question looking for those drop-down options and add rows. Also, another thing to point out is that CDP scores are based only on information in your CDP response. So it's important that you rather explain all of the information within each question and don't point out information that's provided, for example, in your sustainability report, as the reader is only looking at those specific questions that we're asking. So make sure to include everything there. Another thing that I've already highlighted in some examples was these question linkages. So CDP does check the consistency of your data throughout the questionnaire in some both qualitative and quantitative information, but really crucially making sure the breakdowns of the figures that you provide are adding up consistently and are not greater than 5% different from one another. And then I would say really the most important point to focus on, especially from a management and leadership level, is reviewing your qualitative responses in line with CDP guidance and scoring criteria. So throughout the questionnaire, especially at the management and leadership levels, we're looking for clear explanations, rationales, and company specificity, as well as case study examples of the information that you provide in your response. So for clear explanations, we want to know, why and how. So a statement such as "this is not relevant for our business" is not considered a good rationale, basically, because it does not explain why or how the topic is not relevant. Also, any explanations that are repeated or duplicated might only be eligible for points if they actually make sense in the context of that specific question. So making sure you're not just copying and pasting your answers into areas where they're not so relevant. Clear rationales, so we want to know a logical reasoning for the methodologies and decisions and actions you're taking. Company specificity, so this is one that a lot of companies struggle with, but this, and I'll give you an example of this in just a second, but this is really how the topics that you're discussing are uniquely relevant to your business. So this is not generally discussing climate risks and opportunities. This would be specific for your sector, specific for your locations, for your geographies, and include business lines or specific internal processes or regulations. So this is really, really important at the higher levels. And finally, the last thing that we often ask for is a case study. So this would be an example of an action that you've taken, and this should include, both. This should be time and location specific. For example, a region or a specific supply chain where this approach was applied. And we generally recommend companies to follow the STAR approach, so the situation, task, action, response approach, to construct those case studies and make that really clear. So this slide was just to give you a brief example of what a company-specific example does not and does look like. So as we can see from the poor response, this company has identified rising mean temperatures as a potential risk for their business. So simply stating rising mean temperatures have the potential to negatively impact our operations. This is not company specific, and this doesn't clearly indicate how this risk is actually relevant to your business specifically. Whereas we can see in the good response, they're indicating, which percentage of their plants in which location and why that area is particularly impacted by rising mean temperatures. And we see the kind of expectation of 15 to 20% there. So providing some kind of indicators of those impacts is also important. You can find more information on all of this, though, in the introduction to CDP scoring, which is also linked here. So when you receive this presentation afterwards, you can follow up on that. So that covers it for my presentation. I know I went quite a bit over, but I hope we still have a bit of time for questions, and yeah, happy to answer those.
Sure, well done, Anya. And anybody who's been through the response knows how detailed it is. So even to get through it within the hour or so that you did, it's quite an achievement. So well done on that. Just jumping straight into some of the questions, with two specific questions on science-based targets. One relates to the deadline of the 15th of June and whether that applies to both paid and unpaid data submission routes. I don't know if you can see those questions. And the other relates to science-based targets and the ability to use a science-based target as verification for scope 1, 2, and 3. I don't know, Owen or Anya, do you want to take that?
Yeah,
Owen,
I'm happy to take the first one maybe and leave the second one for Anya. So I think the first one was in relation to this 15th of June deadline that was on the timeline I presented. And maybe for some additional context, that deadline is the deadline by which a company needs to have submitted its science-based target for validation in order for it to be counted in this year's disclosure cycle, so that they would get back the result of whether it was validated or not in time to then include that in their CDP response. And science-based target validation is always paid now. As of, I think, a year or so ago, there is a cost for the validating process. So there wouldn't be an unpaid route for submitting a science-based target for validation. But happy to one-on-one discuss with Brian maybe a bit more about science-based target setting, or even connect him to one of our colleagues in CDP who specializes on science-based targets.
Great. And Anya, I think you were looking to respond to the second question, which is around using science-based targets as a verification for scope 1, 2, and 3 emissions.
Yeah, so it's definitely not used as a verification for scope 1, 2, and 3 emissions. The Science-Based Targets Initiative is really looking at the ambition of the targets that you've set and whether those targets are in line with a 1.5 degree aligned future. So not specifically focusing on your emissions inventory. So verification of emissions should be a separately carried out process that can be part of your usual audit process where your auditors would have to be also assessing the validity of the emissions figures that you're providing. So if you do have further questions on verification, we also do have a lot of resources available on our website about what CDP expects in terms of verification. We have some templates that you can use, and we do work with a lot of verification partners as well.
So maybe picking up on some of the questions that we got in the survey beforehand, and we've covered a lot of items here, but there's particularly problematic questions. I know we touched on this before, people struggle with risk and opportunities. Maybe in section C4, you've got all of those initiatives that you have to collect. Any commentary on that? And maybe how are they? Should you start with the tough ones first, or any thoughts around that?
Did you want me to take this one, Olin?
Yeah, why not? Thanks.
So struggling on risks and opportunities in general. I mean, this is a tough area for a lot of companies, but I think the first step is also having some sort of process in place to identify those risks and opportunities. I think using the framework of how you actually identify substantive impact on your business in terms of your thinking about what risks might be substantive for your business. But generally speaking, I think, yeah, just important to try to provide as thorough as information as you can. I think some of the things that companies tend to struggle with most are providing those financial figures. And we don't expect this information to be perfect. We understand that often this is estimations, which is also why we provide the opportunity for you to provide a range of those impacts. But I would say also where you don't have that information, like not to shy away from disclosing on those topics, but if you don't have a figure, you're always given the opportunity to explain why you don't have that figure, or to provide any other kind of metrics that you might use to identify impact.
Yep.
And I might just add a more general comment, because I know there are a lot of maybe new responders here, and it might seem very daunting what we've just gone through and looking at the questionnaire, but just to really emphasize that partial responses are still seen as more valuable to not responding, and particularly because we've really tried to design the questionnaire so that you can give this context and explanation if you don't currently have the data to hand, and that's still fine, and it is very much a journey as we've described, so we don't expect new responders to be scoring in the management or leadership level for the first couple of years, but as they do the exercise year on year, they learn from the gaps they had last year, from the feedback they receive, and then they can actually improve.
Yeah, and I know we're allowed up to 20 free and maybe 100 if we pay the extra subscription, but the source of peer information and best practice from one of the questions was here, how do I, where do I see best and best class? There's some, A and A minus and even B responses in your section or sector that would be, is always worth having a look at first. And even as a first time responder, just to get an idea as to how others have approached some of these questions. We find data collection for organizations defining their boundary as often as a challenge. So, obviously getting the footprint done first and early, that you understand what's actually in your emissions, is worth doing. And then, in parallel, starting to look at the risk and opportunities. And maybe another subject that also causes challenge sometimes is capturing details around all of the different initiatives across the business. that the company is working on in the space. So there's invariably large global international companies have lots and lots of things going on. So getting all that information in. So starting that process of collecting information from all of the sites is worth doing as early as possible. I have a question for you around this thing called the supplier engagement score. We very often get asked, it causes a little bit of confusion. It's not the supply chain questionnaire, but it's a score that companies get for supplier engagement. Maybe you can explain what that is and where it comes from.
Yeah, happy to do so. So that was introduced a couple of years ago, and what it looks at is it evaluates your own company's engagement with your suppliers. So very much separate from the supply chain module, which you might have entered information to send to your customers as their suppliers. This instead looks at different parts of the questionnaire. So in the engagement module, where Anya has just shown that there is a question on engaging your own suppliers, and also in the scope 3 section, it just picks a couple of questions from there and then runs a kind of mini analysis based on your response to those questions to ascertain where you fall in terms of your own supplier engagement. So it's also separate to the CDP score. It's just something that's looking at this one aspect, but given the importance that we're seeing of scope 3 emissions, as you've already talked about earlier on in the session, this is something that companies maybe would like to understand more how they're doing on it, where they can improve, and then it can also ignite conversations maybe around engaging their own suppliers through something like the CDP supply chain program.
Very good.
Yeah, and just to add on to that, the methodology for the supplier engagement rating is also available online. So there's an introduction to how all of those criteria are assessed.
Yeah. Okay. So we have, I think, upwards of 10 first-time responders. Before you start the process with CDP, is it, what any thoughts? I mean, we talked about getting your footprint. What about resources and teams and, sharing stuff around an organization? Any thoughts on, what you hear has worked best for companies? Do you sit in a room on your own, turn out the lights, pull the curtain and just get working on it? Or do you, bring everybody in? And any thoughts on that?
Yeah, I'm happy to start off. Maybe Anya can add. I think firstly it's so company dependent because depending on the operations and the structure, the group structure, etc., it can vary a lot. But I think it's important to just look at what you have already. Oftentimes this information is there, but not in this nice format, and it's about pulling together what you have. So kind of running an analysis in what might have already been included in some of your sustainability reports, or even in your mainstream annual reporting, or in any other resources you have internally, and then creating a project plan. So understanding then the departments which do hold the data that's going to be needed to fill in the questionnaire, and as you said, getting in touch with them early and making sure it's clear what you would need for them to complete the response. And then I would just really emphasize what Anya said about using the resources online. So at CDP, we're all used to having a couple of big screens up at once, because we often have you'd have the questionnaire itself, the reporting guidance, and maybe the scoring methodology all open at once. And you really walk through one question in the questionnaire, read the guidance to understand, what it's asking you, explaining the terminology, then look at the scoring methodology to understand what points could be awarded here, and what's it incentivizing me to do, and just go through it on that way.
Excellent. We have a question relating to the sectoral responders, but I'm wondering if we might leave it till after. That just relates to the scoring of the new sectoral. Do you want to take that now? So, how did the thresholds work for first-time sectoral responders? Are they the same as the general questionnaire ones? I think I heard that the new sectors are going to be scored slightly differently first time out. So, do you want to comment on that?
Anya, would you like to comment on the scoring?
Yeah, I can comment on the scoring. So it is true that there's a slight variation in scoring for different sectors, as different topics might be more emphasized for those sectors. So for example, the new financial services questionnaire, the emphasis is more so on scope 3 emissions accounting rather than scope 1 and 2, and the energy category for consumption of renewable energy is not quite so important for financial services companies based on the nature of their business. But from a scoring perspective of the new sector questionnaires, I would say we generally are taking a light touch approach. So most of those new questions are being scored at the disclosure and awareness level. So first of all, just for the completeness of your response and for being able to provide that information. And then again, showing your awareness or consideration for a lot of these new topics. I don't know if Olin, you have anything to add to that.
No, I think you've captured it perfectly. Yeah, exactly. I think that the point on it being light touch for the first few years, because we're trying to just incentivize the disclosure of whatever data you have, and we understand it's new for a lot of all companies really in those sectors. And then as you've seen, as Anya's just presented, year on year, we reevaluate the weightings we put on different sections of the questionnaire for each sector. So that could change from next year onwards.
Hey. So I'm conscious I'm eating into people's break time, yoga, exercise or whatever. The participation has been fantastic. We've been up above 30. Everybody's been very active on the poll. So thank you very much for that. So we're going to take another, it's going to be 10-minute break this time. And then we're going to come back and talk about the new sectors. I think obviously we've got the new financial sector, which will be of interest, and obviously real estate. We look forward to seeing you back at 12:15 for that. And we're also then going to talk about forestry and water, and then have a wrap up and close and cover any final Q&A. So thank you very much. If you want, as I said, we'll be back in 15 minutes, or less, sorry, 10 minutes. Any questions, fire them in now, email them across to us before or after, and we will be sharing the recording and the slides afterwards. So we'll see you all in 10 minutes or so.
Yeah, thanks very much, everyone.
Thanks, Anya.